Hi, it's David here with Future Trader. I want to go ahead and make another video for the how to put it all together like a professional. And I want to do this one in real time so you guys can look at it. And thank you for all the participation that you have presented here. And thank you for all the likes, users, stack and pull. Thank you for joining me. KJU, again, I appreciate all of you guys. Thank you so much. But let's get into it because I know the market is about to start and I want to make sure that you see this in real time. So it's 9:30, right? So it's 9:30. There's your center of your chart. And again, you do not need all of the other stuff that people are promoting. All right. So remember, there's some individuals online who's trying to take my content and distribute it as if they're the, I guess, the originator of this information. So let's get our statics here. And I want to make sure that you can see this in real time. So it's up to 85, up to 95. We're going up to 95 here, and then from 95 up to '05, just in case they take this run up. All right, now the lower part of the chart, clearly you can see is right inside of our range. Now I'm gonna turn these the color that they should be. And I didn't get a chance to really do anything with the chart. So I'm gonna have to do this right in front of you while the market is moving, which is a good thing, again, so you can see how it all works. And again, this is just doing it like a professional. Taking the information I've already released, and we'll take a look at, of course, the channel, and I'll show you where everything is located. If you're viewing this for the first time and you don't know anything about what it is that I do, I'm trying to give you some free information that can get your trading to make sense. Notice when you pull up the chart to know what's likely, just what's likely at first glance. Clearly, they're beneath the center of the chart, so expect it to go down. That's number one. The second part of it is how far beneath the center of the chart, which is where we look at the lower half of the chart. Okay, we look at the lower half of the chart, and I'm gonna make sure I divide that up for you. I know they're kind of getting on their way a little bit here. Today may be a back and forth day. I'll say that outright. I do believe the day may continue down, but you may get you may get some bigger swings coming in before the afternoon. I'll say that. I don't suspect that they're going to just continue straight down as they did the overnight. I don't think that's going to be the case. So, but that's just what I think. Now, the lower half of the chart, the range is falling. Well, they're located right there. Now let's just back up for a bar, just for a bar, real quick. So whoever's new to this, they can see how the range kind of fell right in that lower half of the chart. The center is up here. I added the indicator to put my center in there for you, so I don't have to draw all of this information. All right, now if they're trying to slow down, you will still reference roughly right, let's say right about here, just a little bit below the center of that range, just a little bit below it, because what you're doing, you're getting the halfway point, and let me draw it out for you so you can kind of get it. You're going from the halfway point of the chart down to the bottom of the scale. You do not let the scale adjustments throw your I guess your expectancy off as to what it will do, because remember the chart has potential. And so what you would have to do is that you'll take the lower half of the scale and you'll do something to that nature. Okay, you'll kind of frame it out. And so and then that puts the center right in that static level. Now this information I released, and we're going to take another look at it. Just give me one second. Let me show you where I've released it. All right. So I released this information 2 months ago. All right. So we're looking at the ranges, the static level, and the chart scale. We're going to combine all three of those methods. All right. Now I put it all there for you 2 months ago. All right. Now, because I've been on here since May, so we're going on about 3 months. So needless to say, here's this lower half of the chart. There's the center. Even though they're popping up, you don't anticipate that it'll go up just because it's popping up. That's not how it works. And again, disregard the fact that the scale is adjusting. It's almost like one of those things that let's say at a carnival or somewhere where they have tricks and stuff, try to deceive you in some capacity, some magic show or whatever. The scale will adjust. And that visually, and now I'm not saying that they created the scale to do that, to just meaningfully throw you off. That's not what I'm telling you. But what I do want you to keep in mind is that everything that's, of course, provided to you, the platform, the indicators, is, I guess, in some degree meant to assist you, but it's a conflict there in some degree because I don't want to go into that. But it's meant to help you, but it's not. Okay. So just kind of keep that in mind. We can make another video about that. Now, Don't let this scale trick you. Just don't let the scale trick you. We'll do it like that. We'll just say it like that for now. We'll dive into that a little later on. But I touched on it a little bit in the video about the rows, the three rows. So and that's on the channel too. I'll show you where it's at by the time all of this is done. But again, this is the lower half of the chart. Lower half of the chart. This is the upper half. Now all of the back and forth, totally get it. I understand. But notice how the ranges are falling right in this area. Now, if you're looking for a static on this side of the fence, we will go 55 down to, oh, I got to get this one, 45. So we will go 55. Now, I believe they already punched through it. So that means you're owed the next level. But let's see if they'll try to hold this turn. So you will go 55 down to 45. Okay. And then if it, of course, begin to break back down under it, you would flip it upside down. So right now, I'm gonna just leave it gray. We're just gonna leave it gray for now. All right, so now it will go 55 down to 45. And then if it goes down, you will flip it upside down and go 55 up to 65. So 65 will be roughly, yeah, the center of the range. And so the center of the range, lower half of the chart, you add a static, kind of all of that comes together. Now, mind you, they already took this static out. When they go past 45 by one tick, that's too far. That's too far. You're actually owed the next one, which is down at 25. I'll just throw a zone down there. So let me throw a zone down there for you. So that'll be 25 roughly. I'm gonna go roughly here. Down to 15, and then 15 down to oh 05. Okay, so we'll go 15. I'm gonna just kind of throw this out there real fast because I want you to see the scale work. All right, so there we go. So somewhere in that area, there you go. Now they took this zone out. Once they triggered it by going one tick past it, you're really owed the next zone. You really are. It's not to say that they can't turn from here and go up, but if you're looking at the location, this is why you got to combine it all. If you look at the location, we're still beneath the center of the chart. We're at the lower half of the chart, respectfully, and we're starting to turn back around. So you would have to, in some degree, just off of, we're not even talking price patterns. I'm gonna tell you about the price pattern, the coloring of the bars. I'll tell you about all that in a second. But you have to, in some degree, saying there's a lot of things, well, at least the three things that I'm telling you is lining up for the short. Okay. There's three things that's kind of lining up for the short. Now I just flip this upside down for you. That's all. Let's see what the response is when they come back into it. Now, the goal is for them not to go back outside the back of this zone. So even though they're pushing up, you just don't want them back through the back of the zone. You know. Now, of course, again, this is just a static level. It's a price level that's important, 55. And so you just go 10 on either side. Just depends on how they want to play it. And that's why I gave you three things to go with three. So that way you can kind of build some confluence around it. So now high. So yeah, they went outside of it. Okay, so maybe let's flip it back this way. Let's just flip it back this way. Now again, the static level is flexible, but they do owe you the next one. When they pass it, they do. Sometimes they'll pass and then turn around and go the other way, and that's fine. That's why you'll use the chart scale. The chart scale is the most definitive way of going about it. I'm the pioneer of it. All right. I'm the first one you'll ever see online, will have seen thus far, use this method, just using the chart scale. No Fibonacci, no support and resistance lines, no trend lines on the top of the candle, no none of that. You don't need that stuff. All right. So now they of course they push down. Here's the lower part of the range. That's the lower part of the range. They hit the lower part of the range and they're coming back up the lower half of the scale. They're coming back up the lower half of the scale. So the next expected place for them to go, being that they didn't want to go ahead and just rip to the downside, is that they may go and try the center. They may go and try the center of the chart. All right. So I told you before we even start coming back up here that today could be one of those days where they're going to give you, some bigger swings. They are, and there's reasons why I know that. It's just reasons. But let's just deal with what they're doing currently. All right. So if they're not going to stay beneath here, the lower half of the chart, well, your next expected place for it to want to test is back up here. Now, when they get up here, will it turn? That's the thing. Now let's look at some statics just above here. Should it not want to stop right at the center? Let's grab something right at the right above it, just right above it, but not quite all the way to the top. So we're going to go 15 up to 25. And we're going to start just layering in some zones up here just in case they overshoot that center. Because remember, the center is just a general location, just like that lower half. We just kind of generalize it, put just a zone there and say, hey, let's see what we can build from this area. Now, clearly we got our this morning's range up here too. We got that going on as well. We got that. So this static that I'm about to put, which is the 115. Okay. Well, let me do this. We're going to go 115 to 25. Okay. And then again, this is all in real time, trying to show it to you in real time. Now, let's just say they give a slight overshoot. Now, if they make it to this one, I don't think it's a slight overshoot at this point. I'm gonna be honest. The second one, the first one, I can kind of understand. I really can. The first one, I can definitely understand. But coming up to the second one will create just a bit of a different effect. That's all, because they're getting to me just a little ahead of themselves when it comes to the center of that chart, just a little bit. It's not to say it can't turn around, but let's see what happens when they get up here. All right, so they're coming up to the center of the chart. And again, I don't want to hold you long, and we'll take a look at some of the other information on the hourly, the daily, the ES. We'll do that too. And I just plan to put some videos in this section, the how to put it all together like a professional. I want to do it all in real time too. All right, so I definitely want to do that. Now, they're headed here. Slight push off the top of the range here for the overnight range. The overnight range is in gray, and we'll go back and take a look at that. But I want you to see this in real time and how it works. All right, so they slight pause off that overnight range, slight pause, and then they broke past it. We still have to hit that center of the chart. Now, this zone is no longer relative in essence of a sale. So what you would do is you would flip it and you will go 85 down to 75. All right, so now let's alter the color here just a bit. Let's do it like this. All right, so you would just in your mind, you don't have to draw these on the chart if you don't want. I'm just doing it for illustrative purposes, so you are aware of how it will begin to work for you using chart scale. You got to use chart scale. You can put the statics with it. You can use the range. You can put out now. You're getting a little bit of response. Is at the center of the chart. We'll see what it do. We'll see. We'll see. But I flipped this upside down just in case they want to come back this way, because once they go one tick outside the zone, they're headed to the next one. And so you don't have to reference that one anymore. Reference the, of course, the one behind it. It was this one. But coming back this way, it would, if they were, of course, just a bit higher. I think this is still in play here. But if they got outside the zone and came back down, it would be 95 down to 85. And so they shouldn't trigger 85 if they're going up. And so because they didn't blow the zone, I can't, definitively tell you that they wouldn't come lower. But if you want to get ahead of it and say, hey, there was a chance they was going to blow the zone, that's how you would play it. You would flip the zone just as I did with that one, and you would go this way. I just got to make the other one darker. I should have did that. But you got to go this way. Okay. And we're going to make this one green. And you would say, hey, they shouldn't break this zone, because you're trying to give yourself two attempts at it. That's all. Two attempts to see. Now, again, this is just using the static in relation to the chart scale. All right. Just using these. We're not talking price patterns. We're going to talk about that in a second. And again, we're going to deal with the universal one that I released to the public. All right. Now, it's at least three of them that I release, I know, but the universal one is the one that you're seeing. That's the one with the NC and the color bar. That's the one that you're seeing here. Now, when this red bar stopped at the back of the zone and this green bar began to trade back downward, your stop would be right behind 85, well, 84.75, right at 84.75, and you would take the push back up. Now, from here and clearly up to here is just open opportunity is how you look at it. It's open opportunity. They can probably come here. But remember, they're at the center of the chart. So this is a defining moment. Now, it could do what it just did to this, this down here, which will make this green. Let's make this green now that they pushed up. It could do what it did there, blow the zone, turn around and come back through. It could. Now, let's take a look. Now, the chart adjusted. Remember, you just saw that. I just saw it too, even though I'm trying to get this done. I saw it too. You don't really want to, again, regard the chart adjustment. You want to take your mind off of the fact that it's moving. You know, stabilize your entry, stabilize your mind. Don't let your emotions run crazy. It's not what you think it is. It's not. This is deceptive at best. That's what this is doing, is deceiving you to have you look at the chart in a way that is not so relative as this moves. This moving can affect you in some way if you pay it in mind. But the goal is to center your mind, have you focus on a particular thing, so that way you can begin to anticipate what should happen. What should happen. So they dove into the zone. They came off the low. Let's see what else they got. Let's see if they can get up here to the zone. Now, remember, I told you you don't really want to weigh in this. You don't want to weigh up here in this zone. You don't. That's not to say they can't get there. They could. They absolutely could. I just think that would be just a bit much for right now. For right now, if they plan on going back down right away. Now, the trend. We got to count our trend. I can't forget about that because remember, I'm a trend trader. That's what I do. I like trend trading. So that's 1, 2, 3, 4, 5, 6. There's 7. So now you have a trend, and let's do our trend distance. I got to throw that in there for you too. So we got a trend, and that's suggesting that they can go that far to the upside. Now, is it from the trend bar that they'll go that far? Because if so, that would put them. There's a couple ways you can do this. That'll put them above the range. All right. So now let me shrink this back down. I'm gonna give you two different ways to look at this. Typically, they'll dig back half of the trend and then they'll go typically. So I'm gonna give you both ways to look at it. All right. So now all in real time, right in front of you. All right. So not nothing complicated going on. You don't need some higher time frame like this individual that's trying to steal my content. You don't need all of that. All right. You just need to focus in on the time frame that you're on. You don't have to have all of that other information going on. You just don't. You don't need three tabs trend line on the top. You don't need any of this stuff. Remember, I can't recall what exact video I told you, but you don't need trend lines. You don't need moving average because which one do you use? And that's the thing about it. Which one do you use? When you start getting into all of that, the trend is the trend without that stuff. It's just added information. So let's go half of the trend here. Let's just put this in that zone and say, hey, they can get about right here, which will still put them outside here. We don't want them really outside there, but let's just say it's going to be one or the other. It's going to be either the one right to that zone, right outside that zone, or it's going to be to the one above the range itself. Right. But yeah, you don't want to go with that information. Some 4-hour chart, three tabs, and trend line. You don't want to do any of that. That's not how you trade. You trade this time frame. This time frame is important. What it's doing right now is important. You go to a higher time frame, you're gonna run into another problem. All right, so now they're trying to respond here. And I told you this is more likely to go down if they're going to stay down. I think a nice little overshoot of the center. This kind of makes sense. You're still beneath the upper half of the chart. Now remember the upper half is here. Right, let's say right at this line right here. That's about the upper half dividing this top. We're going to do the same thing we did to the bottom. Let's do that so you can visually see it. All right, so let's take the center of the chart and let's go like this. All right, so let's do that. I should have did this when it was moving, but it's okay. You get it. You'll get it. You can pause the video, rewind, and you'll see that this is relative. So this is, dividing that upper half from the center of the chart to the upper half. And I told you that this is likely for a turn when it was down here, like a professional. Do it like a professional. I'm trying to teach you how to do it like a professional, where you make trading simple. You don't make it hard. Don't make it complicated. Whatever you do, don't do that. I also told you if they plan to make the trend distance, they can come back into half of the trend. Now, they're blowing through the zones. Not really what you want to see. I'm not going to flip them just yet, though. I'm not because they kind of did that here. They blew through the zones and then they came back above it. Not really what you want to see. It's just not what you want to see happening. Sometimes that will be the case, but here's the top of that range. Here's the middle of the range. Sometimes that will be the case where they'll blow your zones, but then sometimes they won't. It's just another way. That's why I released 3 different ways in 18 minutes. That's the key. 18 minutes, I released 3 different ways you can find turning points in the market. Okay. That's my goal is to get you. Here we go. Up here. Let's go up here. Profitable immediately in a condensed, digestible way. Important. I want to give you some information that you can benefit from immediately. All right. Now, don't want to see them blow the zone, but that's just one way of going about it. The scale, the scale is the most robust way to do it. Really, really robust. All right. Now, the ranges, second in line. Absolutely. The statics, third in line. Third in line. So if you put them in a, I guess in I guess a category of significance, you would go scale, range, statics. All right. Now, if you can get the statics to kind of work, that'd be awesome. Now I'm not going to flip them, but if you were to flip them, it would be something to this effect: 85 back to 95. So if they push up, you don't want to see them go past 95. I'm not going to flip them though. And then from 95, you'll go up to oh 05. So somewhere in here, and I'll just throw a little line there so you can just kind of get an idea. If they want to stay down, it'll be something to this nature. All right, so oh 05, that'll be right about here. Now I got this thing about things being like perfectly straight and flat. Something mentally that I got going on. But 85, 95, I'm sorry, 85 to 95, that would be the sell zone. This would be your sell zone here to go back down. I would like to see just a little something else happen right now. Just a little something else. So let's see what else they're going to do before I flip these zones. Let's see. They're back beneath the center of the chart. They went up near the upper half, and I did tell you they can get here. You just don't want them way up here because then that creates another scenario. But let me see what else they're going to do, because remember I put this here, this here. I put that there, okay? Because I suspect if they're going to do this trend distance, they'll wind up here, and possibly here. Just depends on how they want to go about it. All right, so just below the center of the chart, just below it, not by much, here's the top of the overnight range. Okay, top of the overnight range. They're trying to leave these zones again. Now, even though they went through it, they just dove into it with this bar and they're coming back up. All right, that's fine. If you're going to get back above the center of the chart, all right, then they just triggered that sell side. If you were trying to sell it down, if you were trying to sell it down, they triggered that. All right, so that's they're on you the next zone when they do that. Now I know it's kind of complicated because down here, when they blew through this, they respectfully supposed to went to that one down there, but they turned it. So again, this is just the third alternative way of doing it. That's all it is. Now, are they going to go back up here and get in here? And I suspect that they will if they're going to stay above that center of the chart and not even come back to the lower half. Because see, the lower half, is roughly right in this area here. Remember, we put this here. Okay, so it's roughly right here, and they didn't want to make it there. So I suspect this is where they're coming. Now, when they get up here, I told you this is a bit too lofty, in my opinion, for it to go back down. That's just my opinion. Now, that's just what I think. And I told you before we even got started with all this that you're probably going to get bigger swings today. Whole nother level of information. All right. Whole nother level of information. So either they was going to go ahead and rip or this makes sense. Now, I just wanted to tell you that. Now, I can't tell you why I know that this is possible, but yeah, I know the swing should be a bit bigger. That's all. Now, let's see what happens when they get here. See if we can get a rotate back off here down to the center, maybe for a bounce off this. And that's why I didn't want to flip the zone. Maybe a bounce off here and then take it back up again, do another push. All right. But this is where they're going. And the key is when you get into a trend trade, hold it for the trend distance. That's the key. You don't scalp out of these moves. You hold it for the distance. All right. That's the key. Because at some point they will tap your stop. They're going to get you. And so you have to be able to hold it until it gets there. Okay. So once you get in it, for reasons that make sense, clearly, hold the trade. You have to hold the trade. Now, here's a no close bar. They came under here. There's a no close. They did this one a little bit, no close. They went under it. As long as they don't close, they should push again. They pushed again. Now, if you would have tried to hold that trade with your stop there, they would have kicked you. All right, not a problem. When they came down here, okay, and here we go, try it again. And clearly they don't pose to hit you here. That's the hard stop is here for that no close bar. The no close bar here, the hard stop is here. And hopefully, if they're coming off the high, or even here before you saw this high, if they came down, buy it, and there's your risk loss. Okay, so here, let's map this out just a bit. You buy it as they push down, and you lose this much. Right, so you lose that much. And they would have offered you, roughly 2 to 1 on that. But then they would have rotated down and they would have clipped you. Do it again. All right. So you got to do it again. You can't stop at just trying it once. Try it again. And I know it looks intimidating, but you have a trend. You have a trend. You can try it twice at least. I told you you can come to the mid of the turn. I mean, well, the mid of the run, the trend itself. So it should turn around somewhere. You don't want them way back down here. And so you try it again. And so here, from here to here, let's just measure this. All right. So from here to here, from here to here, that's what you're really looking like if you lose. That's the point. If you lose, all right. But you wouldn't have lost. They would have honored the fact that pattern was there. And so now, as it turns back around, now let's say you got in right at the top of the range. Let's do it that way because you can't say it would push this far down into it. So let's say top of the range in this zone, you already net positive on this move. Okay, you've already made at least 2 to 1. We're expecting it to get here. Okay, so now you're looking at, let's say you entered here. That's pretty good if it can make it. If it can make it, that's pretty good. They're hitting that zone again. Let's see what they do. Now again, you got the no close level here. Now I told you they may they may come back up here and then rotate down back towards the center and then go again to make that distance they make. So let's see if that'll happen. Now put it all together. If you don't have the tolerance to hold to here, at least target the next zone because if they're going to trap sellers in this, go to at least here. No one can fault you for at least that much, but whatever you do, don't scalp this. You don't scalp trends. When you have a trend, you take the bulk of the move, take the bulk of it out because you're going to take a loss. That's how it works. So get your 2 to 1 at least. Now, mind you, you could have got in here, and I'm projecting forward. The goal is to don't get in. You see this big red bar. Don't get in here. Get in below it. If nothing more, just save yourself a little bit. Just get in right beneath the low of the big bar and then put your stop there, if you want to play it that way. Now, am I telling you to trade against big bars? Absolutely not. Because some days they're going to get you if you do it. I promise you. If you trade against a big bar, some days they're going to run you over. And I mean, they're going to take advantage of you. But that's not quite this scenario this morning. And I told you that, yeah, they were going to swing to the upside. The swing were going to be pretty big today, and I told you that. Now, plus you have a trend, and they haven't made the trend distance yet, or even had attempted it as of yet. So you got to kind of put it all together. This may be intimidation at best. It's not a trend down. So let's see if they'll go back that way. Now, even if you did, again, get in right at the low of this big bar, there's that risk. And so you would have lost, based on you taking an entry when they came down into this big bar, hopefully at least at the mid of the big bar, you would have lost that, lost this little bit. It's not too bad if they're going to go down and plan the trend back down. You'll get that back. I can assure you. But the goal is try to put it all together. Go try to put it all together. Now I'm trying to talk to you about where your entries are at too. I try to do that because I don't want you to just look at this and not understand the potential of what could happen. Because remember, the price patterns are there too to help you get into the trade. So you have this kind of price pattern here. Now this is for the down. Let me go ahead and outline this for you. This is for the down. You got to get the mid of the bar. Well, I know this bar is not quite mid. All right, so now you got to get the mid of the bar to be below the low of that bar, or the low of this bar need to be above the mid of that bar, whichever way you understand it. All right, now that's the down, and the up is just the opposite. So while that's trying to shake back up, well, I'm just going to explain to you this pattern. So here's the up. So the up is this. If you're new to the channel, you don't know anything about trading. This is the universal trend as well as the universal price action technique. All right. So now, simple stuff, not a whole lot of complicated verbiage. We don't have to do that. So if that mid is above that high and that high is below that mid, that's an up. It's really simple. Now, you don't want them to close for the most ideal optimal entry. You don't want them to close back beneath that bar. You don't want them to close back above that bar. Hard stop right beneath that. Okay. Hard stop right above that. And then you look for the move back in the opposite direction. Now, let's see what they got. They haven't made this trend distance yet. They still above the center of the chart. Again, they still above the center of the chart. This is not a trend down, so you have nothing to worry about. It should just take right back off again. It should. Now, I know they're responding to this static. Remember, we put all this information here because we anticipate that it could do this It would make sense. Here's the range. Here's the static upper part of the scale. Simple stuff, nothing complicated. Now we're going to adjust this just a hair, not too much, about right there. All right, so center of the chart, maybe need to come down just a teensy bit more, right there. All right, so yeah, center here, that's roughly the mid of the upper part of the scale. All right, so we're not worried about anything beneath the center as of yet. They're still bullish. We'll look at it like that. They're still trying to push up. So let's see what they can do. Let's see if they can get to this, at least the center of this range. Let's see if they can get there. Now you have three. That's one, two, three. If they're going to make seven back down, yeah, you might have that swing back down for them to start running back down. You may. But right now, we have a trend up. Okay, we have a trend up. We'll put that there. All right, then let me just go ahead and type that for you. This is the trend because they made the distance. All right, so they made the distance. This is the trend. All right, so that's the trend right there. So let's do this. That is the trend. All right, so we got the trend. Let me remove this box. That's our expected risk. I mean our reward for the risk. So let's see what's going to happen here. They came roughly to the center and they popped up. Now, again, I'm just giving you possible entries just using that price pattern. There's so many other ways you can enter, so many. But I'm just going to give you what I've released. All right. So no close under here. They can possibly go up. No close under here. They can possibly go up. Hard stop right behind the bar that has the NC. So the NC on this bar, stop here. NC on this bar, stop here. Now you have to trade it, again, according to your risk parameters. You may want to take it, below that bar. You may take it at the close of the red bar. You may even want to take it as it's going back up. Totally up to you. But the stop still have to be right here. This right here, the trend distance, and I have to say this, and I've been saying it in all my videos. This is them telling you how much you're going to make. And that's why it's important for you to get the trend distance. Do not forget this major piece to trading. This is your income, people. This is them telling you potentially how much you're going to make. Now, I have to say potentially because they can make a trend back in this direction and then offer the trend distance back down, but it's still going to come back to what I said. The trend distance is how much they're willing to pay you for coming to work today. All right. Really want you to embrace that. This is how much you're going to get paid today for showing up for work. Do not leave your pay on the table. You wouldn't do it at any other job. Don't do it here. This is how much they're willing to pay you for coming to work. Take your paycheck and go home. All right. And that's really important. Don't offer it back to them. Don't do any of that. Take your pay and go home. All right. So I want to make sure I express that to you. This is a no close bar as well. Now, they're not making it all the way down here to the center of the chart, but that would be the hard stop there. So now let's see what you got. Let's see what you got. This is a no close bar. They didn't want to close above it at first. Let's see if they'll do it this time. They already kicked the stop for that pattern. For that pattern, they kicked the stop. But this is a no close level. So to have this here, 17 and a quarter. All right. So now, if they're not going to break that high and they're not willing to close back above this bar, let's see what else they'll do. Now, here's the no close here. All right. So this is a no close hard stop here. Now, we can't have both happening up here. That's not ideally what you want to see. So let's see what else they're going to offer. For right now, you only got three down. Maybe they'll come down to the center, hit this static, and then take off. But if not, there's your entry. Hard stop here. Take the ride back up and see if it'll work. All right. Now that's your risk. This is your risk right here. Even though that bar came down red, that's your risk. Take the shot. If you believe that it can, if you believe it, that it can go from right here, take the shot. That's just the risk. If you lose, that's fine. Wait till it get under this bar. This is a no close bar. Now here's your risk. Gauge the momentum when it gets here. Take the trade back up and still go get your paycheck. It's not going to change the paycheck. If they're willing to offer you the trend distance, the further they come this way, the better it is for you to get your paycheck. All right. That's all it's going to offer you more. So not well, in this case, it did wind up turning. Well, that's a good thing, I suppose. But I actually wanted to see it come here so you could see whether or not it would still give you that trend distance from here. This will be the static at the center of the chart. It still makes sense for it to go up as long as it's above the center of the chart. Now, did they close above this price level? That's the thing we want to see. Now, let's see if it took this price level out. 17 and a quarter, close. 17 and a quarter closed right at it. So let's see if this bar can actually take it out. Let's see if this bar can take it out. We're gonna see. Putting it together like a professional. All right, that's what this is all about. Now, for those of you, while we're waiting, for those of you who watch this video here, why blowing out an account makes sense. I see that you guys watched it, and I appreciate you doing so. Let me close this. And again, thank you for the follows. Thank you for the likes. Appreciate it. Now, for those that you have watched it, remember I emphasized this one word right here. All right, this one word right here. Procedural. Now, there's procedural knowledge. All right, remember we went over that in that video. It's an established or official way of doing something. Okay, an official way of doing something. And so that's in this video, and I made sure that you understood that that's the most important word, because I gave you a lot of words in there. I tried to walk you through why it makes sense to blow your account out and why you need to. But here's the thing that I told you: make sure you walk away and understand. There's an official way to do something. You can't use a bunch of indicators to get trading to work for you. It's not going to happen. You can use, some understanding called the official way. You have to have the official way to trade in order to make money in the markets. You don't need the indicators. The indicators are not going to give you the official way to do it. It's just not. At best, it may, give you a sense of direction here and there, but to give you a target to know, hey, it should get here accurately enough that it'll keep doing it. Not I ain't seen one. I haven't seen one. I haven't. And if you know of any, please leave the link below. I'd love to look at it. I like to use what it is that they're telling me that they're willing to do. And then when I say they, the people or the machines that's moving the markets, to let me know what's possible, what their intent of. Because remember, you can't remove their intent. Their intent is important. That's the only way you can get any of this to work, is that you have to work with them. What is it that they plan to do? Attach yourself to that and then take the ride with them. So there's a official way. Here it is again. I can't stress this enough, to do something. It's just like the mechanic. There's an official way to fix your car. There's an official way to build a house. You can't bring the mechanic tools to the house to build a house. So when you go to trade, you have to make sure that you're applying the information that's necessary to get your trade to work. The indicators, and yes, I have a price action indicator up here, but it's trying to highlight to you the official way for price to move. If now you can see how the behavior is to these price levels, it's not, trust me, just like here, it's an official way that price behaves. Okay, that's what I promote. Official ways that price behaves, just like this spike off the open. When it ran up, this is a no close bar. You see the NC on it. This is an NC2. You see how they came all the way off that high. This is an NC bar. They dove under it, didn't want to close. There's an official way to read the market. The distance that you're seeing that price would go, there's an official way to read the markets. And there's much more that I cannot tell you, but this is useful. And again, it's something that will make you profitable right away out the box. No sooner you apply it, it should. There's an official way to trade markets. I have you know that. And so your indicator list, yeah, it may help you it may help you with a little bit of timing. It ain't nothing wrong with it. And again, I don't have no problem with indicators. There's nothing wrong with it. But there's an official way that you need to look at the chart. Just an official way. You got to do it in order to get your trading to work. And I don't want you to be, taken, by a bunch of vendors and, fake educators out here trying to tell you how to trade. YouTube personalities and all that stuff, TikTok, Discord, wherever these people are online trying to convince you that they can tell you something about trading. Everybody don't know the official way. Profitable traders do, professional traders do. Now remember, I told you a professional is not about being wealthy and rich. That's not it. The mechanic go to work every day. Okay, but he's a professional. So it's not about the money. It's not about money. It's about knowing the knowledge that's necessary to perform that specific role. That specific role is important, and you need to have the knowledge to do it. All right. And that's what the professional is. He has the knowledge, a particular knowledge at that. Go look up the definition. There's a particular knowledge he has to perform his specific role. And so let's see what happens at 55. Oh, got the wrong one. And so you're going to want to make sure that you regard the knowledge aspect of it. And knowledge is not the indicators. Okay, remember I said in that video, we as people are always looking for ways to distinguish ourselves from someone else. You don't want to do that here. You don't want to come to the markets and try to distinguish yourself, via the indicator list. You don't want to do that. Hey, I want to be different than this trader. I want to do it this way. Nah, you don't want to do that. Now, I think this will be right about where the top of that range is at. There's the center of the chart. Here's the upper half of the chart. You don't want to do that. You just don't want to do that because this is not the place where that's going to yield anything beneficial. All right. You want to make sure that you're applying the official way. And it's not about me. I promise you it's not about me. I can assure you, I'm not some guru, some market engineer. I'm none of that, people. I promise you I'm not. I just took notice of some behavior. You know, I mean, I just want to know what the origin of the source is doing, and I just want to do what it is that they suggest. That's all. And so there's an official way. Okay, you can go back and watch this video. I tried to outline it step by step in 9 minutes. It's just like this information here, 18 minutes. I try to explain to you your mindset your mindset towards the world and then coming to do this. There's natural laws at work when it comes to how we live our lives, and there's laws to trading too. That they're not going to let your ambitions just run wild here and you can do whatever you want. Absolutely not. And that indicator list to me is just another way of just trying to, implement ambition. You can get up there, tweak them numbers on the indicators as much as you want. Everybody that trades come to this with ambition to want to win, but you're restricted by the official way that this works. And so unless you learn what that is, and I'm trying to give it to you in 40 minutes, I told you in that video, I came online to make sure that within 40 minutes, if you're new to trading, because I want this to be a safe place for you to learn. That's why I put definitions up here. That's why I talk about topics that other trading channels don't talk about. This list down here, skills and aspects to become a full-time trader. I talk about your health. I talk about the public at large. There's other things that I discuss here. I don't just talk about the chart. And it may not be popular yet, but I do make sure that you understand that this is a place for you to learn. It's a safe place. I'm not going to tell you a bunch of stuff. I'm not going to ego trip. I ain't doing none of that on here. I ain't going to give you a fancy intro. And let's just get straight to what's happening. If you really want to be a full-time trader, a professional trader, it ain't about being wealthy. It's not about being some millionaire, billionaire, living a life of luxury. Some of you would just like to take care of your families. I want to help you do that. I want to help you do that. Some of you want to finish college and don't want to be in debt when you leave. I want to help you be able to pay your debt off from your college. I just want to help you be able to get stuff done. There are some people you might would like to help that you've seen in your neighborhood, at the church, wherever you attend, functions. There may be some function you may want to put on, to help others, some kind of philanthropy, if you will. I want to help you get that done. That's all in a very simple way. Now, here's our 55 to our 65. Now, let's see what happens up here. I'm not going to color it. Not going to color it. Let's just leave it like it is. Now, they made this trend distance. Okay, they made that trend distance there. All right, now let's see if they're going to get this one too, and then I will be gone. All right, so I hope that you found this information useful. Again, I just want to put some information right into that playlist for you, and I'm probably only going to do, I don't know, maybe another two, probably another two videos. It is two or three, somewhere in there. I don't want to do too many of them. Just probably about two or three, because again, it's the same information. That's all I'm doing. I'm trying to make sure that I reiterate the same information. It's just like college. When you take a curriculum, the curriculum is all about that information, that information that you came to learn. They don't go and start talking about something else. I mean, if you're trying to be a doctor, they don't go and rotate physical therapy into it in essence of you just wanting to go out here and just teach people how to keep their body fit. They actually help you be able to open up the body and start taking a look at what's going on inside. So, and that's the thing, you have to you have to be willing to just again learn more than just how to make money. And I appreciate all of you who take the time to watch some of the other content that I release that's not about just the chart and say and so I appreciate you taking the time to do that. And at the same time, I don't want to make this confusing. Pretty much all the videos that I'm going to put out, and then and again, it may be a little bit more that I'll do moving forward. I don't again, I don't have no plans for the channel other than to make sure that there's enough information here that you can get you a good foundation and it be a safe place for you to learn and almost for it to be like a library for you. So, once you come on board, you can just come back and periodically I'll come up here and put some information up here. But I want to get to a point where there's enough videos in here where I don't have to maintenance this channel at all. Just more or less just have you be able to stop by and like a library, just pick up something, look, learn, and then, take it forward with you. That's all. So how long I plan to make videos, I can't guarantee you that. I'm gonna be honest, I can't guarantee you that. But I do want to put maybe just another, I don't know, maybe another 2 or 3 here, just another 2 or 3 here. Maybe talk about maybe another 2 or 3 topics, and then occasionally I'll, put an alert out here and there. So this will probably again be a channel like I said that's going to kind of smooth itself out within the next 2 or 3 months. I don't want to again overstay my welcome up here with a lot of videos because I think if you're doing it the official way, remember we got to go back to this. How many ways can I explain to you the official way? That's why channels to me, YouTube channels or Discord groups, if you do this long enough as a professional, if you do this long enough as a professional, it's the same thing. Your job doesn't change, when you go to work. You're doing the same thing that you did the day before. And so I just, of course it's real time. In real time you can see the chart differently every day, but I don't want to, again spend my whole I don't know, next, I don't know, 10 years of my life loading up YouTube with, the same information. I don't have no plan for that. So I just want to make sure that I give you some information within, like I said, the next few months, maybe next few months, build up a library on here big enough for you guys to comb through it and find, find your way, while you're doing it. Or, again, have something of reference as you grow in this career, as you grow in this field, have a reference to say, hey, I know where my foundation is at. So if I can't, quite get it to work some days, just some days, I'll go back and refresh, look at that information, then come back and then, of course, get it to work. So that's my goal for the channel. I wanted to make sure I express that to you guys at some point. But all the information here, is all about the universal price action trend and the universal price action method. All right. And as you can see, as it moves up, that's all you got. At least, from the aspect of what I've released, that's all you have. It's just going to keep doing the same thing. Now here, you would flip it upside down, so you will go 55 down to 45, and then let's see if they'll stay above 45, which is roughly the center of that range. Let's see if they'll do it. Let's see if they'll do it. We're going to flip this one upside down. Let's see if they'll do it. My clock kind of disappeared on me. It'll be doing that sometimes. I'm gonna refresh the chart and we'll take a look at what time it is. I believe I gave y'all at least almost a good hour here. So of information. Yes, 10:18. It's going on about 45 minutes, close to an hour. So yeah, this would be the demand to continue up. I just want to see them get to that target if they can. If not, we'll just conclude it here. But that's the goal. To again, just to give you the same information over and over and over again until you're fully persuaded, totally convinced that this is the only way to go about it. Now, you can go and add whatever you want to it, but there's an official way to do something. And if you comb through all the information on the channel, and that's why I put the must watch list here. This is the core content. This is the content that's the core of all the videos. Everything that I'm talking about here deals with what I showed you guys 2 months ago. 40 minutes. All right, 40 minutes in total, roughly. All right. Giving you, 3 different ways to catch turning points, And of course, I think the chart scale is by far the most robust one. That's the one that, again, I'm being copycatted already. That's the most robust one. Um, I gave you the trend, which is your income. This is how much you're going to make. This is how much you're going to make. All right. Now, I've done my time sitting in front of these screens for years. All right. And that's why these ranges work like they do. All right. And so I'm factoring in the price list. This is the invaluable down here on the bottom, the thing that they're doing their best to make sure that you can't get it right, that they don't want your timing to be right. So I've already done the homework for you guys. Okay, so here's that range, your static levels, and when these two don't quite get it, guess what? This one right here won't fail you. Um, there's that trend, which is the distance. Okay, and there's other ways to read a trend. There is, but this is to me the one that I wanted you to have. Uh, and then of course the no touch price action method here, no touch, no close price action method here, which is a consistent way to look at the chart. It's very consistent. It's in every winning trade, and I put I put that up here too to let you know if there's any trade that's going to work. I can assure you that this is in it. And so, I would have you know that your best chance at winning in the markets, you're going to want to make sure that it's a procedural way because you got to have procedural knowledge. You have to have a way that you go about trading that doesn't change. I didn't give you a bunch of multi-time frames charts with support and resistance on it. I don't do that stuff because what's happening here is important. What's happening on this time frame is important. I can't stress that to you enough. You can go fractal. Yeah, again, I know how to look at higher time frames. I know how to read the higher time frame in just this chart too. But it has to be an official way that you trade in order to get your trades to work. I can't say that to you enough. I know I keep kind of pounding on the same information, but there's someone that I'm sure is watching this video that needs to know that it's not complicated. The hardest thing that you're going to run into is trying to control risk. It shouldn't be that you're going to struggle with where price is going because I've already told you, and I plan on making at least 2 to 3 more videos doing the same thing at 9:30. It's not a question as to where price is going. That's not it. It's not even as much as where do I enter, to be quite honest with you, because the pattern is there for you to get in it. Just get in it. If you see that mid above the high of this bar, this will become a no close bar, and that would be the hard stop. Now, you have this here, and that's they went up there and tagged it, but I'm just giving you an example in real time. Or you can wait until the pattern forms, until it completes itself, and when they test back into it, take the trade. The only thing you're going to have to again concern yourself with at this point is the risk. Do you have what you need risk wise to cover the suggested stop? So if it's suggesting that you can put the stop behind this bar, and you gotta factor in that part. That part I can't do for you because everybody trades size differently. You have some people that'll trade this many contracts, some that won't trade that many. So that I can't do for you and wouldn't want to. I think that's not what you need for yourself. What you need is just to know the official way to do it. The official way is learn what it is that they're willing to pay you. Learn a location that they're willing to offer you a potential resumption to go and pay you. Just they plan to pay me. When do we supposed to do that? So the location kind of promotes the time too. Okay, that kind of promotes the time. So you're going to want to put these components together, and I hope that I'm reaching one of you who's listening. I hope that I'm reaching you and making sure that you're again retrieving the information that I'm putting out. That's why I load the channel up with definitions because I like to read the dictionary and the encyclopedia, and so I try to put information here that's not just exclusively centered around taking entries off of a chart because this field don't involve tuition academia, like hey, you had to finish school with these kinds of grades or this potential GPA. You get a lot of that riffraff here. You get a lot of thieves that come in and try to take your content because it doesn't filter out the kind of character that should be here. And so what I want to do is give you a safe place to learn with the level of, you know, oh man, what a level of I would say conduct associated with it, an ethical way, a moral obligation, if you will, to let you know, hey, there's an honest approach to trading, and you may not hear this information coming from these other sources. And so that's why I put the definitions in some of these videos. So you'll see the standards that these definitions promote. When I read these definitions out to you, I have to adhere to those words as well. And so there's a level of accountability with trading. And most people, when they try to sell you, you know, uh, indicators, or invite you to come listen to something that they're suggesting that you trade, they're not willing to display to you the mental capacity and of course the intent of the mind. They're not going to go in and reveal all of that information to you. I plan to do that. So again, just a different aspect to trading that I want to offer to you guys who's watching this content, so you can trust what it is that I'm telling you. Is again, there's an ethical way to be a professional. You have to deal with ethics. You have to deal with conduct. You have to deal with moral obligation to be a professional. This is the part that's being left out because there's no filter. There's no tuition. There's no academia that has to be met in order for you to qualify. So everybody that gets a computer and can open up a brokerage account is just flooding this field. They're flooding it, and they're making it hard for people that need to learn, without blowing a lot of money. They're making it hard, and I want to kind of offset that. That's all. So I wish you all the best with your trading. Take care.